Hello traders. Today is the 8th of June 2011, and happy trading to you all. London is now closed, but New York is open. The time is London is 42 minutes past 6 p.m. Okay, which is 1:42 p.m. Eastern Time. Exactly in 18 minutes time, okay, the bench book data will be released. So the market is watching carefully the USD yen currency pair, the dollar, particularly the dollar, against all other currency because of the bench book data being released. For those of you who are new to us, we are the TSTWS08 traders, and our website is www.stochastic-magdi.com. This video is about Forex under microscope part 3. If you have not watched the first part, the second part, you may perfectly go and watch, okay, the Forex under microscope video, and then the Forex under microscope part 2. Okay, so this is the third part of that series of video that we are posting on YouTube right now. Okay, we are looking on the yearly chart of the USD yen currency pair. In the previous two videos, we have talked about the Euro USD, the leading currency pair, and the correlation between currency pairs. In the second part of the video, we talk about the USD yen and the Canadian yen currency pair, okay, and also about the commodity market, that the money will come out of the commodity market into the dollar, and vice versa. Money come out of the dollar into the commodity, and when the commodity, okay, the commodity become overbought, okay, the money will come out of commodity into the dollar, and if the dollar is oversold and the commodity overbought, money come out of the commodity into the dollar overbought, money come out of the dollar into the commodity. This is a cycle that has been going on for some time, okay, that you need to be aware of. That's about the second part of this video that we titled Forex under microscope part 2. We also talk about the Fed decision, okay, regarding inflation, and also inflation going up, okay. The Fed can increase the interest rate or bring the price of the commodity down, okay. These are very important. And also in the second part of the video, we talk also about the importance of the fundamentals when you are trading the Forex market and the economy news. In this video, the third part of the series that we titled Forex under microscope, we will talk about market manipulation, okay, currency wars or currency competitions, okay, and the opening bells, okay, very important. We will start with the opening bells. One of the things that you need to pay attention to when you are trading Forex, okay, when you place a trade during the Asia session, which we do not trade at all, we do not trade the Asia session for the Forex market. If you place a trade during the Asia session, you must close that trade before London opens. Very important. If you have been doing that without knowing about it for years, it's time for you to stop it. You place a trade during the Asia session, close it before London open, because otherwise you will be likely to be taken out, because the market will move in the opposite direction when London is about to open. We enter the market when London opens and when New York opens. The first 2 hours are the best hours for trading. This is the time where you will see excellent volume, high volume, and a professional in the market. Do not trade when the professional are going to lunch, okay, during the lunchtime Eastern time, okay, and lunchtime London time, okay, and also between just before a market is about to open. If you see a valid signal, do not take it. Wait for the market to open first. Sometimes trader will rush and enter a trade just before the market is open, because they are impatient or they think that they will miss excellent opportunity. The market is full of excellent opportunity, and all you need to do is to remain calm, join the queue, so to speak, and wait for your turn. So respect the opening bell. The second part in this video, the second important point that we can mention in this third part of this video, is about market manipulation. Okay, the currencies are not stocks, very important. So the Australian dollar belongs to the Australians, very important, and their government will protect their currencies. So when you are selling a currency, or when a currency is overbought, meaning that the goods that have been exported from a country become so expensive, the government will intervene. That's what we call sometimes market manipulation, the intervention of a government. We have seen recently the intervention of the Japanese government to bring the yen down, because the yen is rising non-stop. When the country is in a recession, the government must do something, okay, to rectify, okay, this imbalance. Very important. This is what we are talking about, the market manipulation. If you are trading Forex and you do not pay attention to the central bank, and you do not try to go into the mind, so to speak, into the mind of the central banks, you cannot enjoy your Forex trading. Okay, so you need to understand, okay, the psychology of these people, because the central banks are there to control the inflation, price going up, because commodity price going up. The central bank get a bit they are under pressure to bring the inflation down. How do they do that? They will either increase the rate or bring the commodity price down one way or another. Or this is what we are talking about. They can also print money, devaluing the currency. Printing money means devaluing the currency. The devaluation of the currency is usually followed by a high inflation. Okay, do not forget also about the deflation. So we are trying to go into the mind of the central banks to understand what these people are likely to do. As we know, the Euro USD, the Euro currency is now being manipulated big time. The ECB want the Euro to be strong, going up, because why? They know that the market want to sell the Euro big time to the downside. They cannot afford to have the Euro, a new currency, a freshly made new currency, a young currency, to go down. Okay, the drain. So they are protecting the euro. Anytime you want to sell the euro, anytime there is a valid signal to sell the euro, you will see that the euro will drip down slowly, because the ECB does not want a weak euro. The Germany, the strongest, the partner of the eurozone, does not want a weak euro. So this is something that you need to be aware of. Right now, because of the trade balance of the US economy, okay, compared to China, okay, the trade balance of the US has been very negative, also very negative. And now the intention of the Fed is to have a weak dollar. Okay, it's very important, a weak dollar. But contrary to the European zone, the Fed is very open to the market, which means the Fed allowed the yen to flow a bit, which we can see clearly. The yen, they allow the yen to go down, but they allow the market to push it down. They are not intervening in the market like the ECB bank is doing regarding the euro. How do we know this? We cannot confirm or deny this information. We cannot verify them, but the price is the number one indicator. Looking at the price of the number one indicator, we can see that there are some activity behind the scene taking place. The price does not hide anything. This is what we call a stable data in the market. If a financial instrument is manipulated, it will show on the price clearly, and the traders will be aware of it. You can perfectly take advantage of the market manipulation, trading in the direction of the central bank instead of trading against them, because they can control the market one way or another. So be aware of that. This is about the market manipulation. Okay, now the key about the opening market is the opening bell is the stop loss being taken out. There are people in the Forex market, especially some of the dodgy brokers, will be busy trading against their own clients, because they know your stop loss. They will try to take you out. But do not worry about it, because if you are trading during the opening market times, okay, you don't have to worry, because the market is full of professionals, full of traders. Okay, this is the trading activity time, and it's not easy for one group to control the market quickly like that, because you will show up on the screen of everybody and people will take advantage of that. So that's why you do not trade the quiet period or the gap period that we have highlighted in the document of all the TSTW trading system. Very important. Okay. The third part that we want, the very important point that I want to mention in this third part of the series, exactly in 8 minutes time, we will have the beige book data. Okay, so I'm watching the time also. Is that if you go on to sell something, okay, if you want to sell something, what do you look for? Okay, if you want to sell something, do you look at the market? Do you look at the price? What do you look at? Okay, I want to show you something very simple that you can pay attention to if you want to sell. Do you want to sell a financial instrument that is has been going down for years? You see this one, it went down, a big time down, a bit of green here, going down. Do you want to sell here? Okay, I don't want to sell here. I would prefer to sell here or somewhere here or half here. If I see a financial instrument, I draw my trend line like this. Okay, I will show you something very simple that you pay attention to. It's valid for stock, for commodity, for crude oil, or anything that you are trading. Okay, so you draw your trend line like this. You see it, it has been going down for some time. Okay, not only that, you can see that the low of this candle, okay, compared to where the price is now, when the price is taking the previous low, that's a weakness. So a price went down, try to go back above the previous low, which is where I place my red horizontal line. You see where the price is now? The price is approaching, it went below the previous low, which is a bearish. Now the price is coming back near the low of the previous candle. That's bullish. I don't want to sell here. I don't want to sell here. I want to sell when it dips below it and come back to retest this level. That's what I want to sell. Okay, but also you have to see how long this has been going on. Is it sustainable? Will it continue? That's the question you have to ask yourself before you are selling. It does not mean that this thing cannot continue to go down, but I don't want to sell a financial instrument in this kind of a triangle like this, when the low, the closing price and the low are getting very close. You see here, you see the closing price of today is coming near the close, because the low of the previous candle. This is the yearly candles. If I want to sell something like this. Okay, something like this, you see, has been going up for some time. What I will do, I will not just go and sell. I will check the fundamental. Is this in overbought? Do we have any economic condition, any economic situation that allow me to look for opportunity to sell? If the answer is yes, I will sell, because this has been going on for some time, for 3 years, 1 year, 2nd year, 3rd years now in a row. It has been going up. Now we know very sure that if a financial instrument is going up continuously for 3 years, it's time to look for opportunity to take some profit. Traders always take profit, and if you want to sell, that's the time you want to come into the market to sell. So do not sell something that is looking like this, something that has been going down. I mean, you sell during the downtrend when there is a rally in a downtrend, but you want to sell at the beginning of the downtrend to take a huge profit, not at the end of the downtrend when everybody is taking profit. On the other hand, if you want to buy, you don't want to buy at the end of the uptrend when everybody is busy getting ready to take profit, as it happened to those greedy traders in the silver market recently when the silver crashed down. Okay, you can see that silver went up to the $50. Okay, and people come to buy at the 50 level when everybody else was ready to take their money out of the market. Okay, so I hope you enjoyed this video also about Forex under microscope. Okay, part 3. That you will remember these important things that we have told you now, that you will put them into practice in order, okay, to improve your trading and also to clean the market consistently. Thank you for watching, and we will speak to you very soon. We are the TSTW 08 traders.